A very warm welcome to you as you join us on today's episode of Tax Matters. My name is Pearl Naimaka. Last episode, we brought you the first part of the 4.0 edition of the National Tax Debate, powered by the Tax Club, University of Lagos, and we did promise to bring you part 2 on this episode. Interestingly, the second debate was an all-female affair that we really wanted you to see. We are, however, afraid that has to move over for the story of the FIRS Stakeholders event, which took place on Thursday, September 6th. All over the world, government business rests upon a robust communication system aimed at public acceptance of measures put in place by government. This is even more so for tax administration. For a robust, publicly accepted tax system, public enlightenment and education are crucial. From time to time, the Federal Inland Revenue Service engages the public in different ways, through the media, in the marketplaces, on the road, and in sector-by-sector engagements, all aimed at informing and educating taxpayers on their rights, their duties, and obligations under the various tax laws. One such occasion took place on Thursday, 6th of September 2018. It had in attendance representatives of auditing and tax consulting firms, representatives of ministries, departments, and agencies of government, labor, tax practitioners, leaders of professional bodies like the CITN, ICANN, ANAN, as well as leading lights of the organized private sector. On hand to receive them were chairmen of state boards of internal revenue, members of the board and management of the FIRS, led by the Executive Chairman FIRS, Chairman Joint Tax Board, Mr. Babatunde Fowler. The event was to discuss issues of national importance with respect to tax administration and national revenue. Mr. Fowler began by reminding his audience of the current state of the Nigerian tax system.
Nigeria still has one of the lowest tax revenue to GDP in the world. All experts, international experts from the World Bank, from the UN, from the OECD, etc., came up with the position that if our tax revenue to GDP is below 15%, it is not likely we'll be in a position to fund social or economic infrastructure required in this country. Now, if you look at 2018 revenue to date, between January and August, we have done 3.5 trillion, which is over 1 trillion over the same period of 2017. On paper, it looks good. But the main issue I wanted to point out here is that the majority of taxpayers that are accounted for this revenue have not changed. The laws have not changed. And to a great extent, the consultants to these companies equally have not changed. The collection between 2016 and 2017 showed an increase of over 700 or close to 800 billion. The increase in 2018 so far showed 1 trillion. Now, if the same consultants advised or reviewed the accounts of the majority of the same taxpayers, one would wonder why such large increases occurred. It is either that the taxpayer did not disclose fully their financials to the consultant, or the consultants were also involved in what they call tax planning. But either way, it is not to the well-being of our nation.
Continuing, Mr. Fowler spoke on the obvious inadequacy of oil revenue in funding national development.
We can clearly see that even at current prices, the oil revenue tax cannot fund our nation. And I think if we all agree, the only way is for us to have a high level of tax compliance and focus on the non-oil. A major component of the non-oil happens to be VAT. And we have found out that a number of businesses collect VAT and do not remit to government. So we're going back the old school way. And I'd just like to publicly display this. This is the new VAT certificate, which will be given to all taxpayers. And we expect them to display it in their places of business. We also found out, and I'll give you actual figures, that a number of businesses were not even registered taxpayers, and they were collecting VAT. Now, without having a tax ID as an agent or a collector of VAT, there's no way you can even remit that VAT to government. So in short, they were collecting this money and adding it to their income or spending it.
Do you provide goods and services? Then you must answer these important questions. Are you registered for VAT? Do you charge VAT on the goods and services you provide? Do you keep records of all your transactions? Do you file VAT returns? Do you remit VAT collected to government coffers? If your answer to any of these questions is no, then you are breaking the law. The law demands total compliance. Therefore, you must register for VAT. You must charge VAT on goods and services. You must file VAT returns. And you must remit all VAT collected on behalf of government within 21 days to the bank nearest to you. To do otherwise is a crime punishable everywhere in the world. VAT is prescribed by the law. Do the right thing. Collect and pay VAT. This message is from the FIRS. It pays to pay your tax. VAT, Value Added Tax, is a tax paid on all goods and services and remitted by the seller of the goods or provider of the service to government. 5% VAT is added to the total cost of goods and services in Nigeria, and when remitted to government is used for funding development. The VAT you pay will be used by government to develop our transport infrastructure like roads and railway lines, to continually improve our educational sector by building more schools and upgrading existing ones, to provide adequate security and a better quality of life for us all. Pay your VAT. Make your contributions to the development of Nigeria. It pays to pay your tax. This message is from the Federal Inland Revenue Service.
Mr. Fowler spoke on several other issues, including tax compliance culture, tax audits, as well as making tax compliance convenient for taxpayers, as well as efforts being made to review tax laws. Time will not permit us to share all this with you on this episode, but in the time available to us, we will share with you Mr. Fowler's presentation on the roles of banks in tax compliance.
We looked at all businesses, partnerships, corporate accounts that have a minimum turnover of 1 billion per annum for the past 3 years. First of all, the law states clearly that before you open a corporate account, part of the opening documentation is a tax ID. From the 23 banks we have analyzed so far, we had 31,395 records, out of which effectively, minus duplications, we had 18,602. We broke those into 3 categories. Those that have a TIN, tax ID, and pay. Those that have no TIN, and of course there's no TIN, no pay. And those that have a TIN and have not even paid anything. So on a minimum, every company or business included here over the last 3 years have had banking turnover of 3 billion and above. Some of them have had banking turnover of over 5 billion and not paid 1 kobo in taxes. Now, the total number of TIN and no pay and no TIN and no pay is 6,772. Banking turnover does not mean that is the turnover of your business. It just means that is the amount of money that has gone in and out of your account. But what the tax law says is that if you do not file your returns and you're in constant default, we use turnover as a basis of estimating your tax liability. And I'll give a little example. If your turnover is 100 million, we assume that 20% of that is profit, and we tax it at 30%, which means you pay about 6.6 million out of every 100 million turnover. That is the law. Now, what we have done is what we call substitution, which also is in our law, which empowers us to appoint the banks as a collection agent for tax. So all these ones, total of tin and no pay, and no tin and no pay of 6,772, will have their accounts frozen or put under substitution, pending when they come forward. They refuse to come forward under VATES. First of all, they refused to come forward in 2016. They refused to come forward under VATES, and they're still operating here. So we're putting them on notice that it is their civic responsibility to pay tax and to file on these accounts.
On the controversial use of property value to assess tax evaders to tax,
we had situations whereby people called it tax planning. They'll form a company, a shell company, put up a property, not file any returns, and that was it. So regardless of where the money came from, you'll see a company called Ade and Sons Limited. And that company would own a property. We looked, first of all, in FCT, and we established over 2,000 plus properties and lands that were built, developed in corporate names, limited liability companies that had not filed any taxes. The value of these properties were in excess of 2 trillion naira, and they never paid any taxes before. We've conducted or contacted them, sent them our assessments. A number of them are paying. For those that are not paying, and on a lighter note, a number of them claimed not to own the property. Those ones that claim not to own the property, of course, will send to government, to presidency, and they'll decide what will happen to those properties that have no owners. But for those that have owners and have not paid, we're also in the process of going to court to get the approval or the court order to sell those properties. Now, we're not only doing that in Abuja. We've concluded in Lagos also. We're currently doing it in Osun, Oyo, Kaduna, and eventually we'll cover the whole federation. Initially, some people thought we're doing property tax. No, it was not property tax. We're looking at turnover. I'd also like to announce that we now have a consolidated database for all taxpayers in Nigeria under the Joint Tax Board. We just concluded it, and before the end of September, it will be made available to all state internal revenue services and other government agencies like immigration, customs, so they can all use it.
thank you for staying with us. The event was essentially a stakeholders event, and in keeping with that, stakeholders in attendance were given the floor to air their views.
The issue of turnover, sir. When you talk about turnover, as provided in Section 30, it has to do with your revenue. But from what we have heard is the fact that this turnover is being taken as cash flow in bank statement, bank account, which you have said is not income. Okay, the law says the turnover of the company, you take 20% and then you apply 30%. Okay, but we must be able to distinguish between what is revenue and what is cash flow. I have other points. Number one is the issue of credit notes. We have been given a short time within which your credit note must be reconciled, and we all know that credit note is equal to cash. And we also know that there are problems in retrieving credit note from from your customers. So I believe that the taxpayers are very happy that the platform is coming on board. In fact, it's one of the greatest things that we can achieve, which has been done. But for all those backyard that we are trying to upload into the system, I believe the FRS can still give more time. The issue of tax audit by the states, different names are being given to audit. Immediately you finish an audit, they come up with investigation, from investigation, something else. And so if there is no certainty in tax administration, you cannot say that, oh, I have been audited or investigation have been carried out and I'm done. We also have Federal Ministry of Justice writing letters on stamp duty. They are setting up their own tax unit. They want to start collecting stamp duty. Okay, some of my clients have received that. Then we also have the presidency set up one committee, okay, and they said they are coming to audit for VAT and stamp duty. There's so much confusion. And the confusion as to which relevant authority should collect stamp duty is still there. We know who should collect the stamp duty, but when NIPOS is also struggling with FRS on the same issue, okay, then what do you want the taxpayers to do? And to support that, NIPOS comes to my client's office with EFCC. What do you want them to do? In fact, there was a client that was appealing to last week to go and pay the tax to FRS. I said, no, when the EFCC come, I will not be there. The EFCC said they should go and pay to NIPOS, and that is where they're going to pay.
Mr. Fowler responded.
First of all, the issue on turnover, I think I highlighted it here. We're going by banking turnover because the taxpayer has not filed any returns. In certain situations, we wrote letters to the taxpayers to inform them that we have information that you've got banking turnover in excess of 1 billion. A number of those letters were returned. In short, the bank did not even know where their customer was. Now, where we could not find the customer still did not respond, did not file. We had to take the bank turnover as deemed turnover. In terms of the credit note, we will give you more time. And there is no limitation. Once you have a credit note, you can apply it to future taxes. Part of our e-solution also, which I did not highlight, if you work for any government agency and they deduct withholding tax, within 45 days, as long as you pay it with a schedule with your tax ID, you get a notification. If you do not get a notification, inform us. We will chase the government agency on your behalf. If you require a tax clearance certificate and you have a government agency, state agency, federal agency that has not remitted or paid your withholding tax, we will still give a clearance and chase the defaulter on your behalf. Now, in terms of the joint audit, the FRS and all the state internal revenue agencies signed an MOU on joint audit. That means that if you have businesses in more than one state, you can apply for a joint audit and we'll audit your account once and for all, FIRS and the state, and it'll be done within 30 days and you'll be cleared. Now, the honest truth is that a lot of businesses have not taken advantage of this because the records they show in one state is different from the records they show in another state.
On the issue of multiple governmental agencies chasing after taxpayers,
the truth of the matter is that some of our laws need to be amended. Number one is the Stamp Duty Act needs to be amended, and it's work in progress. At the end of the day, all this revenue goes to the Federation account and is still shared. So whether it is the Minister of Justice that is helping me collect it, whether it's me that is collecting it, whether it's NIPOS that's collecting it, it goes to the same pot. And I'm saying it publicly here. It's one government. And if you've got problems with any government agency that has to do with tax, let us know. We'll stand in for you. And if they decide to arrest you, I'll go with you.
more comments came from stakeholders in attendance, but because of time constraints, these will come to you in a future episode. Tax Matters spoke with the executive chairman at the end of it all.
Substitution seems to be generating some controversy, whereby you ask the banks to put a lien on customers' accounts and take the taxes due to the FIRS or to the government as it were. Do you want to shed more light on substitution?
Well, before this meeting, people were getting the wrong idea or did not understand what it's all about. But clearly, we've invited the consultants, we've invited the MBA, we've invited MAN, we've invited NECA, we've invited all the trade organizations to clearly explain what is happening. And like I said, we have close to 6,000 accounts, business accounts, enterprises, partnerships that don't have tax ID. Some that have tax ID have never paid 1 kobo in tax. We contacted them, gave them an assessment, which they did not respond to. And so therefore, we have taken substitution, which is in the law, to freeze those accounts until the tax is paid. What the law even says is that the bank should deduct that amount and remit to us. But we said, let the bank just hold that amount and let the taxpayer appear, file returns, and pay the tax that is due.
Would you say that that takes care of the concerns expressed by the tax consultants at this forum, that you can only go through that route when assessment has been finalized, when it is final and conclusive? They are saying that you really, under the law, substitution is allowed, but that the companies have the right to file assessment and that you have to agree on the assessment before you can take that.
Yes, the companies that we're doing substitution on now have not filed. So there's no document. And those that we even give an assessment, a deemed assessment, did not respond and did not pay. So basically it is final and conclusive. And then there were a number where the bank could not even locate them. In short, there were ghost accounts that had turnover in excess of $1 billion. Now, we're not the law enforcement agencies, we're tax administrators, and our job is to collect the tax. Whether your transaction is legal or illegal, we will collect our tax for the benefit of Nigeria. The others will refer to the FCC or other government agencies to carry out further investigation.
If you understand this environment very well, most of these corporate bodies get government contracts. So what are you doing with the MDAs, the ministries, departments and agencies to ensure that people don't get paid unless they have taxpayer identification number, and in many cases that they file returns and show tax certificate?
No, we've had discussions with the Minister of Finance, and she has graciously given directives that before payment, the MDAs should check that they have got a tax clearance certificate. And even before they even get an award of a contract, they should have a tax clearance certificate. That is the law.
What you started a few months ago, looking at companies that have buildings, structures in Abuja, and you've gone to some other states, using the buildings for those companies that have failed to file returns to assess them to tax. People seem to still be criticizing this move. Are you backing down?
Certainly not. I'm a tax administrator, and as long as what I do is legal, there's nothing to back down on. My job is to generate revenue for all tiers of government, federal, state, and local governments, and that is what we'll do.
We're almost at the end of the year. We have 4 months to go. Are you doing well?
Well, depends on how you want to look at it. Some people might say the glass is half full or half empty. In terms of figures, we have done 1 trillion higher than what we did same time last year. We're now at 3.5 trillion as against 2.5 trillion in 2017, and we hope to achieve in excess of 5 trillion this year. We can do better, but all things considered, and by the grace of God, we will do well.
Finally, it's this tricky one because it came up on the floor. Who is really in charge of stamp duty?
Well, you're laughing, but when you hear stamp duty, I'm sure you know who's in charge of stamp duty. Of course, it has to be. It has to be the tax authority. It's a tax.
So what are we doing to streamline?
Well, there are certain laws that have been amended, and meanwhile, I believe the presidency will direct.
I'm talking about amending laws. Several times people have spoken about the regularity or irregularity of tax amendments. Yeah. What are you doing with the National Assembly, both at federal and state level, in ensuring that we bring our laws up to speed?
Well, when it comes to tax, it was agreed in principle that at the presentation of the budget, any tax amendments will be submitted at the same time. So that is going to commence very soon. So I believe the next budget that is going to be presented will also come along with tax amendments.
We thank you very much for watching. We close today's episode by promising that next episode you will see part 2 of the national tax debate. Until then, we wish you a very good week ahead. Bye for now.